Well, the sector that we're now putting the spotlight on is the power space because there are, fairly interesting developments. Torrent Power has received an important go-ahead from the Maharashtra Electricity Regulatory Commission to offer parallel distribution services in Pune, in Nagpur and in the Mumbai MMR region as well. Do note that this decision marks the first step for the company to operate as an alternative electricity distributor alongside existing discoms. And that's not all. Now we know that Tata Power has, bigger plans for the rest of the state, for all of Maharashtra. And they're looking at getting into parallel power distribution as well. So what does this mean for power generators, distributors, or entire transmission set up in terms of fresh capex? What is the opportunity? Let's discuss this. We have Chanchal Rajora, Group CFO and advisor to the board at Transformers and Rectifiers. And we also have with us Nikhil Nigania, Director and Senior Analyst at Bernstein. Gentlemen, thanks very much for joining in. So this is interesting news. It's a good development. Obviously, it's great for consumers. Choice is always a good thing. Nikhil, let me get your opening thoughts on this whole setup of being a parallel operator. Let's talk about, say, Mumbai, where Torrent Power wants to get in, where the Adanis are already present, Tata Power is already present. Is the market big enough to make an inroad? And then likewise for the rest of Maharashtra, where Tata Power wants to expand. Your thoughts?
Sure. So in terms of the regions these three players are looking to target, it's not really the part of Mumbai addressed by Tata Power and Adani at present. It's more areas where they compete with the state distribution company, MERC. So that is a plan. And if you look at the pockets they are targeting, are pockets where they can see good set of customers, industrial, commercial, and high-paying residential customers. So they are picking and choosing pockets which can be remunerative for them. And the parallel licensing, not the most ideal setup. So while giving options to the customer is what should be the direction, but parallel licensing is leading to a capex uplift. It could have been done in an alternate way where the existing infra could have been used by the same, by these new suppliers as well. But given the Electricity Act, the way it is right now, they have to set up a parallel network, which is going to drive up the capex in this space. I think the number for Torrent, which we don't cover, although, is 15,000 crores across the three regions over 5 years. And for Adani Energy, it's about 6,000 crores in the greater Mumbai area.
So this is where you're just talking about current capex. So Adani, 6,000 crores for greater Mumbai and about 15,000 crores for Torrent if it gets into these three geographies, which it has outlined, right?
Yes.
Any sense on Tata Power if they go into this whole parallel network arena?
So their capex, we won't have a view yet. But again, there are different pockets that they are targeting, not these regions, other parts of Maharashtra.
Correct.
But again, subject to the area that they have to cover, they'll have to lay out the same, transformers, distribution transformers, conductors, cables across cities. So it should be a big capex number there as well.
So we'll just talk about how this is obviously great news for T&D players, and we'll Wayne get the view from Transformers and Rectifiers as well. But just before that, Nikhil, to complete the point for the companies themselves, is it going to be lucrative? I mean, at the end of the day, is it going to be a value proposition for shareholders for either Torrent or Tata if they decide to expand on the discom network and go this way? And what's the sense? Can you give us some ballpark estimates? What is the value this will bring to the table?
See, it's still very early days, and this is not a common practice in India, a parallel licensee. These would be among the few ones. The only legacy one is in Mumbai that we have. So it remains to be seen how they evolve. But in terms of returns, if you think from a capex perspective, let's say a 15,000 crore capex would be about 30% equity funded, on which returns on a regulated basis could be about 15.5–16%. Once the network stabilizes, once you get the customers on board, once you reduce network losses, that's the kind of returns usually distribution companies can make.
And to get to that, return of 15–16%, what would you factor in terms of PPAs, power tariffs, costs, to ensure that there's at least that much ROI, at least on the equity component that's going into this funding of the capex?
Correct. Again, so very early, so they'll have to tie up new contracts for buying power from renewable companies, from thermal companies, which sort of for a new player, at least they won't have the old baggage, which less than MEC have. They have good contracts, bad contracts, which they have to live with. But the new parallel licensees, they can sign fresh contracts to buy power and where they can optimize. They can buy from related group companies or from other generators, wherever they see the lowest levelized cost of power.
Okay, all right. Nikhil, request you to stay with us. So let's get in Mr. Rajora. Thanks a lot, gentlemen, for joining in. Well, Mr. Rajora, if you could tell us the parallel discom services approved for players like, say, Tata Power, Torrent Power, what does it do to the overall addressable market for you? Any kind of approximate capex as well that you could look at because of this new addressable opportunity?
Thank you on this, first of all. Let me tell you that the broader prospect of this initiative is not only is going to be benefited for the companies like us, T&D Industries, but it is going to be the bigger service opportunity for the consumers also. And the state is also going to be benefited for this because the service and quality will going to be improved, as well as the cost of electricity is going to be reduced slightly because there will be competition in that. As far as the capex is concerned, as just now the other gentleman says that we do not know what is going to be the capex infusions are there. But yes, there is going to be a very sizable capex when you are going to create a parallel distribution network. And this is basically step is not going to be confined up to a city or a territory, but what I understand, the state government is more focused to reach out to the rural part of the states where the electricity is not reaching. And as says, is thousands of crores of capex is required into that. And probably as just says the Torrent has come up with 15,000 crores, Adani is coming 66,000. Tata may end up more than this because traditionally Tata is in Maharashtra since long and they don't want to lose that areas, right? So this is going to be a bigger game changer, not only for the state, but is going to be for the other part of the country also. That is what I feel.
Got that point. Just hold on to that thought. The reason why the AkzoNobel stock is moving higher right now from lows, despite the deal being done at around 2,700 rupees itself, is because there has been an open offer which has been made, and the open offer made by JSW Group is at over 3,400 rupees, 3,417 rupees per share, if I read that correctly. And that explains why the stock has seen a big rally from the lows today itself, up 6%, actually the highest single-day gain that we've seen all the way since the company announced that they are looking, the promoter entity announced that they are looking to sell this business itself. The open offer at 3,417 rupees is a lot higher than yesterday's close and is a lot higher than the price at which the deal happened as well at 2,700 rupees, which explains the big move that we're seeing. But back to the power discussion, on Torrent Power itself, the question is that while you are looking to grow here, can your existing infra, lead this growth, or you will have to put up some new infra for the same? Chanchal?
They definitely have to put up a new infra because the existing infra will not be able to sustain this. And if they want to reach out to the every corner of the state or the city, they have to put up the new infra.
And how long before do you think this will actually fructify? Because, announcement is one, execution and the actual implementation of this is the other thing here. What are the realistic timelines?
This may take several years. It's not going to be happen overnight. In my view, it will take 5 to 7 years because first they have to go to the regulatory approvals, then they have to go for the different capex infrastructure things. They have to put up the setup and ultimately to reach up to the last digital facilities. And then going to the metering and reaching to the consumers, I don't think it is going to be happened in overnight. I feel that it's going to be happened at least 5 to 7 years.
Gentlemen, all this is happening and we're having this discussion at such an interesting time because I want to remind our viewers, and this was actually a very recent story, so I don't know if people missed it. All of this is happening at a time when, for the first time in I don't know how many years, Maharashtra is looking at reducing electricity tariffs. In fact, if I go by the quotes that Mr. Fadnavis, and he has the electricity portfolio in the state, the quotes that he's given, that power tariff rates can drop by as much as 26% over the next 5 years. This is different from otherwise all the discoms coming in asking for a tariff hike in every year. Nikhil, comment on this. I don't know if you caught this news or not, but this is exactly what it is. And I'm quoting the minister. For the first time in Maharashtra's history, electricity tariffs are being reduced, not hiked, starting with a 10% cut in the first year. Tariffs will drop by 26% over the next 5 years in a phased manner. This is from Mr. Fadnavis. So, what do you make of this and all of this capex being put to work that we're discussing at a time when tariffs are going lower? Could that be an issue?
See, the tariff cut spoken about, firstly, it will be different for different segments of customers. So the lower end of customers possibly get a higher cut in tariffs, and industrial and higher usage customers, maybe not so much. The rationale for it, see, one reason we can foresee is if you look at the last couple of years, coal prices have come down. Spot market, which is exchange power prices, have come down. So from a discom standpoint, input power cost or input cost for them for buying power from different generators has sort of normalized over the last couple of years after the high we saw in FY23. At the same time, many discoms across the country took tariff hikes. So hence, a combination of this, higher tariffs, lower cost, is leading to a lower ACS ARR gap or lower gap between cost of supplying power and revenue realized by many discoms in the country. So the number for your reference at the national level fell from 50 paisa to 19 paisa of losses per unit in FY24, and we think it could be similar or a lower number in FY25 as well. So given this factor, yeah, that's why.
Let's bring that back to Chanchal. Chanchal, you said everyone is looking to capitalize on this opportunity. The problem is the capacity and the availability of raw materials. Do you think that people will be able to, get that sort of raw material to be able to capitalize on this? Because demand, obviously, no problem. Everyone wants more power. But is there enough supply, enough capacity and availability of raw materials?
The thing is, raw material is a constraint as of now today. But see that these things are not going to happen overnight. These things are going to take place in almost, say, 5 to 7 years' time. And raw material availability is now slowly easing up. Yes, there are the constraint in some of the raw material aspects, like particularly if you see on the transformer sides, there is a constraint on the high voltage transformers, but distribution transformers are well available at this moment. But cabling is the constraint which is now easing up. Metering is available. The raw material things are easing up in this country, and this is going to be a 5 to 7 years chain. So I feel that we will be able to sustain and we'll be able to overcome out of this. That is what I feel into that. And look, reducing the electricity, which is just we were discussing about the electricity charges. We also need to understand that the cost of renewable energy is now going down, and lots of renewable energy is coming up into the country, particularly states like Maharashtra, Gujarat, Rajasthan. And it requires the consumers, and it is this is giving a new opportunity to all the producers, and they're going to be benefited for that.
Absolutely. And I also just want to add here that this power reduction that's been announced in Maharashtra, it is being announced by the state discom, by Mahavitran. So that is where, that's the whole discussion, that what will be the viability. These are parallel networks. Will they operate in the same geography, or whether the geographies will be absolutely clearly demarcated? So that's something that we have to see. Nikhil, finally, to round things up, what do you like here? The generators, distribution companies, you can play T&D, you can play the grid. What would you look at from an investment perspective?
No, specifically to this development on the distribution side, we don't have many companies in our coverage in the distribution space. Beneficiaries obviously would be the transformer manufacturers, conductor cable guys from this capex, if it happens, and the three utilities which are applying for the license, Torrent, Tata, and Adani. But yeah, within our coverage, we don't have a direct play for this development.
All right, we take that point. Thanks a lot, gentlemen, for joining in and giving us your views on this. Let's see whether people can capitalize on this. All the initial issues are taken care of, and eventually everyone benefits. The customers due to higher power, and at the same time, investors who look at players who will benefit from that itself. But